If you believe history repeats itself, then you're in the right place. We're going to take a look at GTA historical price growth trends over the years. We're going to extrapolate that so that we can see where prices should be right now without COVID ever happening. As a bonus, we're also going to take a look at where should prices be right now, taking into account the jacked up interest rates. Hi, my name is Vas, and I'm a chartered professional accountant by training. I'm a full-time realtor that's built and invested in real estate right here in Toronto, York region, and in secondary markets. Now let's get into the video. Now, before we get into the video, let's be completely honest with ourselves. We've been totally spoiled with the price appreciation we've had in the last 2 years. It's completely unrealistic. We all know it. Reality is setting in right now. So I feel this is important because before the doom and gloom talk, let's just talk reality. We typically used to have price growth in single digit percentages in the GTA, depending on where you are, depending on asset class. So let's call it, 4, 5, 6, 7, 8% year over year was somewhat reasonable. Now we've had 20, 30, 50% increases year over year in some areas. So it's important to revert back to the mean. So if this line right here is the mean, over time, we will revert right back to this trend line. So it's important to take into account, okay, well, if we take COVID and if we take these interest rate hikes, where are we on this trend line and where are we likely headed? At least this gives us some sort of an idea where prices could potentially end up if history was to repeat itself. Let's start with one of my favorites, Durham. So I've said this before and I'll say it again. If you owned property in Durham before COVID, you effectively won the lottery. No one has seen price appreciation like this in the GTA. Durham totally crushed it in terms of gains. It's unwinding now. I don't know if they're going to retain those gains or not. Nonetheless, here we are. I think the only other place that might have done better is Bancroft, wherever that is. No, I'm kidding. Congratulations to you too. But anyway, let's get into Durham here. On this chart, as you can see, here's the trend line from 2019. Very stable growth. And then as you can see, just ripped right up during COVID. We peaked out here in February of 2022. In January of 2020, the average price in Durham for all property types was $650,000. During the peak, it was 1.228. Wild, right? Since the peak, Durham has now dropped 21%. And if we're to drop right back to this trend line where we should be had COVID not happened, there's another 23% prices need to come down. So effectively another 225,000 from the current average and for us to be back in line with the trend. Moving on to York region. So York region, January 2020, right before COVID, the average house price or the average price for all properties was $915,000. It went up aggressively, just like Durham. And now at the peak, we're at 1.558. Currently, the average price is 1.326. And as you can see, we had a very steep drop, which I've noted before in prior videos. York region got hit very hard, very fast, and then it tapered off. But if we're to come back to this trend line, we need to come down another 206,000 or roughly another 16% to be back within the trend line. No surprise here with the city of Toronto. There was a big exodus. Everybody was leaving Toronto or the city. Everybody was going to who knows where. Because of COVID, cities were dead. That was the narrative back in 2020, but I'm sure people have forgotten that. Toronto didn't do that well during COVID, and as a result, right now, the drop back to the trend line is not that severe. Toronto has dropped only 6% since the peak in February, and for us to drop back to this trend line, we're possibly in for another 9% drop. We can't forget Peel region. Peel region pre-COVID was $792,000 average price for all property types. At the peak, it was 1.346, so they had a gain of 70% during COVID. Since then, up until now, they've dropped 16% since the peak, and for them to come back to the trend line, there is another 13% left to go for us to be in line with the trends. Now, let's talk about the elephant in the room, which is interest rates. Why do we care about interest rates? Because it's purchasing power. This is what's going to dictate effectively what people can afford to buy. Right before COVID, fixed rates were at about 2.5%, and right now for 2022, we're looking like we're trending towards 5.5% or possibly more. So we're going to look at purchasing power between 2.5% and 5.5%, and we're going to see what that does to house prices. Here are two scenarios. Both are keeping the payment at $3,500 a month, roughly. Here's $800,000 mortgage at 2.5%, and here's a mortgage at $580,000 at 5.5%. Effectively, at 2.5%, you were getting $800,000 worth. At 5.5%, you're getting $580,000 worth if you want to keep the payment $3,500. The reason I'm talking payment, because this is how most people shop. What does this mean in terms of price? If in 2020 you were looking to buy $1 million house and you had $200,000 as a down payment and you were able to get an $800,000 mortgage, you were able to buy this $1 million house. What's happened now is, to keep the payment the same at the current interest rates, that $1 million house now became $780,000, because you still have your $200,000 down payment, but you can only get $580,000 worth of mortgage based on the payment you can service. That's an additional drop of 22%. I don't think this is how this plays out. However, there still will be a material impact on purchasing power. So maybe it's not going to be 22%, but let's say it's 15%. Now we're going to take a look at the trend line where we should be price-wise right now, had COVID not happened, and we're going to factor in a 15% drop to reflect the interest rate hike that we've currently had. Now, full disclosure, the reason I started looking into this information is because all the alarmists were saying that with interest rate hikes and all this stuff happening, we're going to go right back into the Stone Ages. Real estate's going to be dead. We're just shutting it off. We're calling it a life. We're done. It looks like our worst case scenario as of right now, assuming rates don't go up to like 10%, we're just going back to 2019 pricing for the most part. Now let's look at Durham. We have another 23% to drop to come back to trend, and if rates sustain at 5.5%, let's assume that eliminates roughly 15% in purchasing power. We have another 12% drop, and we're coming right back to 2019 pricing. Taking a look at York region, again, we need a drop of 16% to come back to trend, and if we're to account for the purchasing power decrease, we're going to come back an additional 12%, which brings us roughly to March 2020 pricing. The city of Toronto, once again, one of the better / more resilient ones, simply because it didn't have the gains like the other jurisdictions did. But if purchasing power was to revert because of the rate hikes, then we're coming back to March 2020 pricing, and we're looking at an additional 13% decline in pricing. And for Peel, like we said earlier, we need another 13% decline to come back to trend, and if purchasing power is accounted for in this, then we're looking at an additional 13% for a total of 26% drop for us to revert to trend and to account for the interest rate drop. And that brings us back to April 2020 pricing. Real estate is a touchy subject right now, especially as it's making its way down. However, I'm a big believer that generally history will repeat itself. I think we're going to revert back to this mean that we were on. So we're going to continue on this trend line. How we're going to get there, when we're going to get there, I don't know. But I hope this gives you a little bit of context so that you understand that the doom and gloom, it's not the end of the world. Yes, if you bought during COVID or since 2019, you could be underwater if all the worst things happen. However, it's going to be temporary and eventually things will recover. As far as I'm concerned, I'm still bullish on Toronto and GTA real estate, but the gains that we've had are completely unsustainable. We've also priced out a ton of people that are trying to get into the market and can't. So now, hopefully, over the next few months or next 18 months, we're going to hopefully have some opportunities for first-time home buyers and people that wanted to own to get into the market and fulfill their dreams. If you have any questions or comments, please comment below. Let me know what you think about the video, and I'll see you in the next one.